Alright, for this video I want to go through a sample 944 for the 2023 tax year. And the 944 is an annual federal payroll tax return filed by a company. So in this example, we're going to have a very small corporate entity that has one employee who's also the owner. So we'll go through the 944 and what needs to be filed. We've also got for reference here the publication 15T, which is used to look up how much federal income tax withholding you should have on those wages. And then we've also got a workbook here where we've laid out his monthly, quarterly, and yearly wages and how we calculated these taxes. Now, starting with the 944, really important here to remember that the 944 is an annual return, but if you have payroll that you file on a quarterly basis, you would be using the 941. So 941s are filed quarterly. The 944 is filed on an annual basis. Now, the 944 can only be used if the IRS tells you that you can use this form, right? So under what circumstances would you get this notification that says you have to use an annual return instead of the quarterly 941s? Well, it largely depends on how you completed your EIN application. So this is the SS4 application for EIN. You can also fill this out online. But if down here, you notice in box 14, it has a note about if you expect your employment tax liability to be under $1,000 and you want to file the 944 annually instead of quarterly, you can check the box here, right? And so if you've checked that box, you're going to get an EIN confirmation that says we expect that you're going to be filing the 944 now. All right, so that's generally how it happens. So in this example, the company did that deliberately because they expect to have a very small payroll. So we'll go through the payroll return and how everything is filled out here. So if we start with the workbook, so in this example, we have John Taxpayer. He's this sole shareholder of the company, and so he wants to set his pay quite low because there's little activity. So he's going to pay himself $350 a month, so $1,050 for the quarter, and then $4,200 in total compensation on a yearly basis. Now, the payroll taxes that come out of his paycheck, we have 6.2% in Social Security, and the Medicare is 1.45%, and then we'll get to the employer portion later. But we can see here that on a monthly basis, quarterly and yearly, right, we are calculating the 6.2% of the wages. We're taking that out of his paycheck, and then we're doing the same for the Medicare, 1.45%. And then the federal income tax withheld is going to be 0. So why is it 0? Well, in his case, when he looked at this publication 15T, if you look at the manual payroll systems for 2020 or later, when he goes to the wage brackets for the year, he notes up here that, well, if your adjusted wage amount, so this is a monthly payroll, if it's under $580, there's 0 withholding, and that's for all filing statuses. If he was at $580 to $600, then he could have $1 taken out of his paycheck as federal withholding tax. So he just set it at 0 and then ran with that. So we have the worksheet here, $0 in federal income tax withholding. So he's got $4,200 in yearly gross wages, and that's his net paycheck of $38.78.70. Now, the employer portion of the payroll is matching these rates, right? So we've got the employee taxes here, the employee Social Security, the employee Medicare at 1.45, and then we're calculating the same amount for the employer. So employer Social Security, employer Medicare, and then the federal income tax withheld is 0. So all in for the year, the payroll taxes that the company is going to owe is $642.60 of FICA, right? And then 0 federal income taxes. So under this scenario, he's still entitled to, and it's consistent with what he reported, that he's going to have less than $1,000 of taxes that are going to be owed with the return. And that's what's noted here as a reminder, right? If you expect that your employment tax liability is going to be $1,000 or less for the full calendar year, you can use the 944. All right, so let's start looking at the 944 here. So we've got, it's a 2023 year. We confirm that we are able to file this, right? We don't have to file quarterly. So we've got the EIN at the top, the company name, street address, And then in part 1 is where we start calculating the payroll taxes that are owed. So we've got gross wages, federal wages, $4,200. And line 2, federal income tax withheld, is 0, right? We didn't have any federal withholding. Now the taxable Social Security wages are the same, $4,200, and the taxable Medicare wages are also $4,200. We don't have any of these items related to qualified sick pay. He's not in a tip income kind of position. So the column 2 calculation is the $4,200 times 12.4%. Gives us $520.80 of Social Security tax. On the Medicare side, we have $4,200 times 2.9%, and we're left with $121.80. Add the two together, and we get total Social Security and Medicare taxes of $642.60. That amount reconciles with our workbook here, $642.60. Okay, so now we just complete the rest of the form, right? Our total taxes before any adjustments is the same, $642.60. We don't have any current year adjustments. This is where you would enter certain rounding amounts, so add or subtract a penny to get it rounded to match your the actual withholding that came out of the employee's payroll checks. Total taxes after adjustment, $642.60, and then we don't have any credits that are applying here. And so lines 8A through 8D are all 0. Now continuing on to page 2, right? These are all reserved, so they're grayed out, so nothing to enter there. Total taxes after adjustments and any non-refundable credits, it's the same value, $642.60. Total deposits for the year. So the company has not made any deposits for payroll taxes using that EFTPS system. Right, so we have 0 payments that have been made over the course of the year. We don't have any refundable portions of credits, so all those are 0. So at the end of the day here, the balance due for our payroll taxes and federal withholding, if you have any, but in our case we don't have any included, we have $642.60. So that's the amount of tax that's going to be owed with the filing. Now in part 2, we have to provide more details on our deposit schedule and tax liability. If your line 9 above is less than $2,500, you can skip this because you're not a monthly depositor. So if we go back to line 9, we can see here that our total taxes is $642.60, which is certainly below the $2,500 figure. So we can check this box and skip ahead to part 3. Now part 3, in this case, all of these items are blank. We don't have anything applicable to us, but if you do have items here that apply to your business and your circumstances, then certainly input those fields. But all part 3 here, as it notes, if any question does not apply, we can leave it blank, right? So we haven't closed our business, we haven't stopped paying wages, and none of these items down here, lines 15 through 24, apply to us. Part 4. We've entered John's name again as a third-party designee. You don't have to put his name in there as the CEO and signer down here. That would be sufficient for him to speak to the IRS. But if you do want to appoint another person, so let's say an accountant or a lawyer to speak on your behalf as well, you can input their information there. So we've got Part 4 completed. Part 5, John would sign, date this. He's got his printed name, his title at the company, and a phone, best daytime phone contact details to reach him. And the paid preparer section here is blank because John's filling this out himself. All right, so that section can be blank. But obviously, if you're using a CPA or a lawyer or another bookkeeping service to prepare this on your behalf, you would see their details down here below, right, as the paid preparer. Okay, so that covers it for this video. I hope that was helpful, pretty straightforward. Really important, again, to remember to check your IRS notices and see, are you actually entitled to file this, or should you be filing 941s? And then if you do want to be filing on a quarterly basis, or you have to be filing on a quarterly basis, you can contact the IRS and try to get it switched over, and then start filing the 941s. All right, so thanks for watching. I hope that was helpful. And I look forward to seeing you on the next video. Thank you.